Right, so I'm going to have a look here at the global indices. I'm going to start off with the Dow, and daily perspective looks really good. It's going through a nice little consolidation. Okay, so that's probably just almost nigh on 2 weeks worth of consolidation, holding above this little support level at 33,700. And on the weekly, just looking at kind of how it kind of tends to go up towards a channel. It's up towards the top of that channel now, potentially wanting to a little bit of a correction. Overall, I think though it's quite bullish. Technically, it's still looking nice and bullish. On the monthly, as I've said in the last couple of months, now starting to certainly is now in what I would call overextended territory. So risk is higher, but in a weekly, from a weekly perspective, a nice little correction back down towards 33,000 would be really a very small move down into these previous highs and a nice let off some of that steam, and it would be a nice little weekly correction. Could even come down as far as 32,000. Anything like that for a week or two, and then would allow it to let off some of that steam. But I am starting to note that we're now starting to enter high risk territory, a little bit overvalued, and possibly it wants to work its way towards 35,000 before it does do a deeper correction on the monthly. But on the weekly, just saying there is that potential for a little bit of a retracement here, and I would expect it to be relatively shallow. So there aren't any real money making opportunities here anyway. I would actually have to wait for price to break out before I'd even look or consider taking any positions here. Or breaking here to the downside also would be higher risk to short the market, because the correction, unless it turns out or transpires to be a monthly correction, it actually looks as though it's going to be a relatively shallow one, and therefore higher risk for me to go ahead and short that. So looking at the S&P 500, to go ahead and compare, it's a little bit of bearish divergence here on the daily. Absolutely is there, and therefore the implication is that the market is a bit exhausted, and this therefore that kind of adds a little bit of meat to the idea here that the market might want to do a bit of a correction down towards 4,000. Would be beautiful, very nice for it to do that. It is at the top of that channel, can do it. It is definitely overextended on the monthly. From a monthly perspective, across most of these indices, I would look to see a much deeper correction. If we just did say a Fibonacci retracement, I'd love to see it do at least a 382 correction, and so that would be relatively big on a monthly time frame. But from a weekly perspective, there's really not very far that it has to go in order to let off some of that steam. Here in this case, for example, back down to 3,900 would be very acceptable, and that's not a very long way down. Just back into these old highs would be a weekly correction. So it is showing some exhaustion, and therefore, yes, I'm going to now table the idea that this week might see, especially if we break these lows, might see the market coming back down towards 4,000 and back into these old highs. And again, as there aren't any opportunities presenting themselves immediately anyway, I don't really see that as anything other than just giving the market an opportunity to take a breather. Looking at the Nasdaq here, we've got several rejections of this 14,000 and say 50 level, give or take, and definite bearish divergence there. So this also again supporting the idea that again we might actually see the market start to break these lows potentially and head down. From a weekly perspective, back down towards 13,000 would also be very acceptable. 13,200 into the moving averages here, into these old highs up around here would be very acceptable. So let's say 13,300. As a shallower retracement, I've already highlighted this area from a monthly perspective. Any kind of pullbacks in towards 12,000 on a monthly correction would also be very acceptable. But because it's had a bit of a kind of exhaustion here and then try to recover and push a little bit higher, we'll just have to see what's going to happen with this for the most part. But yeah, so this week already I'm starting to see reason to be cautious. There's just a lot of already technically showing some signs that the market is possibly wanting to do a bit of a deeper correction. This one is a mess. This is now looking at the Russell 2000, just looking at it here the last 5 or 6 weeks. It's obviously overextended on the monthly, you can see that exhaustion starting to creep into the price action, and a nice little retracement here back down towards 2,000 or potentially even further down to 1,700, 1,650. Would also be very welcome and perfectly acceptable. The daily has just been incredibly choppy, and obviously not with trading as well, and that weekly is starting to show some signs of exhaustion. So here in terms of a shallower correction, be down towards that 2,100, possibly 2,000, just staying around the 2,170, 150 area. So yeah, seeing more and more reason to be a little bit more cautious this week. If it does continue trending higher, that's fine, because then I'll start to look for buying opportunities there. But a lot of these are showing some reason to be cautious around this. Okay, so we had some pullbacks. This is now moving on to the FTSE in the UK. Overall, I love the fact that it has broken through here. 7,000 is a significant, massively historical level as well, and so there is some strong resistance that I would expect here. Again, any kind of pullbacks here, for me overall, this is actually quite nice and healthy. And because we haven't been here that often, really, I just want us to be free of 6,300, and it appears we are. But yeah, any kind of just want to see how the market reacts to this. Any kind of pullbacks here, potentially taking breathers before it takes another run up to the upside. But overall, the FTSE not looking, not looking inherently weak. It's just some of the US monthly charts that are looking quite overextended. Then we've got the DAX out of Germany. This already looks as though it's prepping to do a bit of a retracement down to 15,000. A little bit further, possibly down 14,500. If it does, by the end of next week, if we get a bit more clarity on this, and this does end up being a bearish candle, we break the low of that, there is a possibility of that move down to 14,000, or even as far as 13,000, let's say 250, 200. Excuse me, to be a bit of a monthly correction. So yeah, absolutely, it's a possibility now. I think what I'm going to be prepared for here is, at the very least, is potentially a bit of a weekly retracement first, and then I'll determine next week, depending on how much it is, whether it's part of a monthly correction or not. Looking at the French CAC, also again on the daily looking really good, but I could just see here we've got fresh eyes on price. We've got the momentum indicators are turning a bit more bearish. That kind of implying the daily is a bit exhausted, and the weeklies are all looking in a really nice place to have shallower corrections. As I said, at the very least, a correction this week is always going to be warmly welcome, because it just means the following week subsequently there are some nice buying opportunities. So at some point we know that the markets always have to have a bit of that correction. Look at the Euro stocks, also produced a lower high here already. Okay, it's looking more bearish. That weekly starting to look as though that wants to turn and potentially come back down into those moving averages. And looking at the Nikkei and the ASICs as well, so Nikkei's just a mess on the daily, and certainly struggling with it's actually got sort of lower highs here, coming back down into this. Interesting to me here is that this potentially setting up as a level to break through, which would imply a drop, relatively significant drop, certainly down towards 26,000. And actually at that point we start to, I think the idea of it coming back down for a monthly retracement here, starting to look more and more like a real possibility. Looking at the ASICs, also there we go, couple of rejections there of that 7,100 level, top of the weekly channel as well, potential corrections or retracements there. That monthly coming back into the old highs, and also a little bit overextended. Okay, so also that now adding that as a possibility. Let's just casually have a look at Tesla and Apple just to see how they're doing. So Apple had, I beg your pardon, Tesla had a much needed correction down towards 600. Pretty cool, almost back into those old highs, very nice. Struggling to recover a little bit from that, so it's possible that it's going to either go through a consolidation period for quite a while it waits for the real value to kind of catch up. Alternatively, it might decide to head a little bit lower. So that, unfortunately, is just too soon to tell with that at the moment. But it makes sense that if the Nasdaq is going to have a deeper correction, it will impact some of these as well. Apple, yeah, having produced a higher low, there's absolutely some strong resistance at that 140 level, which could be leading ultimately to a breakout, potentially down the line. But for now, producing those higher lows. So if we do break this most recent low in March, then I think we're going to see price hit back down towards 100 here, and so we'll see a bit of a deeper correction. We'll have to see that. Likely in isolation, these charts are looking relatively healthy. The only thing that I think that would force them to have a bigger correction would actually be a global kind of a global correction on a monthly time frame, and the Nasdaq in that case, tech stocks obviously pushing down, and then there'd be a bit of fear, and potentially then there'd be something that overrides the individual robustness of the really nice, stronger looking big stocks. That's it from me. So just to sum up, I'm not really seeing any, I am cautious this week. There is a strong probability or possibility of a weekly retracement at a minimum down towards moving averages, and the daily is not looking that great on many of the charts. So it just means I am looking very cautious. Should the daily start to hit a little bit higher, and then I'll probably use that 4 hours as a bit of a guide. But yeah, there is a possibility based on everything, all of the looking at them collectively, it looks as though there is a strong possibility of a bit of a correction this week. So I'll just be that much more cautious, and otherwise not seeing anything that I really like the look of anyway.